Imagine a nightmare scenario where institutions start dumping Bitcoin, governments start selling it, and even whales start moving massive amounts to exchanges. Liquidity disappears, panic takes over, and Bitcoin free falls all the way down to 1,000 US, a price we haven't seen since 2017. Most people assume that that would be the end of Bitcoin forever, that the network would just die out and transactions would freeze. Even some of the smartest, most financially literate investors have written obituaries for Bitcoin based on its price fluctuations. But in today's video, I'm going to show you how one single piece of code keeps Bitcoin alive, even in the most catastrophic price crash imaginable. Here's what most people misunderstand: Bitcoin doesn't stay alive because of price, Bitcoin stays alive because of incentives. The Bitcoin network isn't secured by belief or hype, it's secured by miners, real hardware and energy competing for block rewards every single 10 minutes on average. So even in a brutal price crash, if Bitcoin fell all the way to $1,000, the one piece of code that keeps it beating is what's known as the difficulty adjustment. This single mechanism automatically rebalances the network, so miners don't simply disappear. The chain keeps running and the network doesn't just die. You see, Bitcoin is programmed so that on average, a new block is mined every 10 minutes. Miners spend real money on hardware and energy for the chance to mine one of these blocks. The more computing power they commit to the network, the higher their chances of winning that race. If successful, the miner earns two things: their newly minted Bitcoin and the transaction fees from every transaction confirmed in that block. Now, in our price crash scenario, when the price of Bitcoin drops sharply, those rewards also lose value, but the miner's costs will stay the same. And the result? Weaker miners that aren't as efficient will shut down because they can't stay profitable. When miners start leaving the network, blocks start taking longer than 10 minutes to mine. That's when Bitcoin's difficulty adjustment code steps in. Every 2016 blocks, roughly every 2 weeks on average, the network automatically adjusts how hard it is to mine the next block. So if blocks are coming in too slowly, then the difficulty to mine a block will drop, making it easier and cheaper for the remaining miners to keep the network running, or for new ones to enter. And here's the cool part: there's no vote, no boardroom, or no emergency meeting that's required. It's just Bitcoin's code executing exactly as it was designed to. On the other side, if the price starts to recover and more miners come back online, the opposite will happen. Difficulty will start to rise again. This automatic balancing act repeats every 2016 blocks, making sure that Bitcoin keeps producing blocks every 10 minutes, no matter what the market does or no matter what the price is. You see, Bitcoin is constantly recalibrating so blocks keep flowing and your transactions keep settling, regardless of price volatility. Throughout Bitcoin's history, there have been multiple price crashes. We've had a couple of drawdowns as high or even higher than 50%, not just in the early days, but even recently, from late 2017 all the way to today. Each of these red circles marks a major crash. Yet every single time, the network came back stronger and more resilient. Now, what's funny is that these big drops tend to trigger the same reaction from mainstream media every single time. Mainstream headlines declaring Bitcoin is dead. There's even a website dedicated to tracking these, and it's called bitcoindeaths.com, with more than 400 obituaries announcing Bitcoin's demise. But here's the truth: price collapses wipe out speculators, that's true, but not the protocol. This is why Bitcoin gets called a zombie asset. It dies on headlines, but never in reality. So, can Bitcoin die simply because the price crashes? The answer is no. Bitcoin doesn't live or die based on price. Rather, it lives or dies based on whether the network continues to function, whether the network continues to produce blocks and continues to incentivize individuals and institutions to secure it. And that survival mechanism is hard coded into Bitcoin. This is what makes Bitcoin fundamentally different from every other financial system we've ever had. If you found this breakdown valuable, then please subscribe so you don't miss future videos where we break down how Bitcoin and crypto actually work. Beyond the headlines, beyond the hype. Thanks for watching, and I'll see you in the next one.